But Nandan Chakraborty, Managing Director of Institutional Equities with Access Capital, joins us live. Nandan, good morning. Can you hear me?
Hi. Yes, I can hear you. Hi.
Nandan, markets are at an all-time high, and stock markets are often considered as the lead indicator of economic activity. At a time when economic activity is at a multi-year low, why are markets at an all-time high?
If you look at the markets, they're at an all-time high, but it's almost near what we were about seven years back. So whatever growth there's been, means there's been already a massive PE derating in India. Which justified or not, that's a different issue. But what we can say is basically that I think the worst is sort of over. So people are looking, ahead, and the best is yet to come. So I don't think there are too many signs of the best is yet to come yet, which is what we've also covered in our reports and so on. But at least the massive negative sentiment, I think that is over.
Nandan, in the month of September, everyone said the worst is yet to come. Now everyone is of the view the best is yet to come. So what has changed apart from global liquidity?
I know. See, the rupee. See, what has happened is rupee is actually a massive forward indicator of the state of state of sentiments about a country and growth rates and so on. So I think what has happened is people were looking at the rupee depreciating like mad, so which obviously affects your CAD and FISC and so on. So I don't think the problems are over in the economy, but people have sentimentally sort of at least not looking at things being even worse. So what has changed is that a combination of the moves by the finance ministry as well as the RBI have turned the sentiments on the rupee that it will not get much worse.
So Nandan, assuming that the rupee stays poor at 60 to 62 sort of levels, would the market have in the near term further headroom than the current levels, or do you think at 6300, 6350 thereabouts it's beginning to get toppish?
See, it's very difficult to now figure out exact Nifty levels or Sensex levels. So I won't go down that path unnecessarily. I think what I will say is, for the present, what we see is the kicking the can on the QE tapering has happened. And you have a couple of state elections coming and so on. So I think what we are seeing is, for the present, we are seeing good liquidity coming in. So that will make the markets sort of travel a fair bit. But I am concerned more about what happens pre-elections next year, which may also coincide with the time when the US government starts to taper its QE. So that's the time I think to be a little more concerned about. As far as the economy is concerned, obviously we have strong headwinds. Until capex goes up in our country, the hirings will not go up. And if hirings don't go up, your urban consumption will not go up. So obviously we're looking at things almost like a couple of years away. Because first capex has to go up and then consumption will go up. So I think a post-political sort of strategy would be maybe those sort of companies which are not expanding. So it's not really a liquidity-driven move, but which, because of the shortage of projects that are going around, things in the old economy, whose capacity utilization levels will rise because of the demand picking up at least from the troughed out levels that's there. Those, and obviously the leading indicators like finance and so on. So I think some of those we will have to change our portfolio stance from now till after elections.
Indian markets are now at a fresh lifetime high, which means officially a new bull market has started.
See, I would still wait for next year to call it a bull market, because bull market starts when the EPS grows up. Liquidity can start, but liquidity cannot carry you too far. There are still a lot of headwinds there, and I would wait for clearer signs of the economy turning around before calling it a new bull market.
Nandan, what's the sense that you're getting though? We were just talking about as to how the market is so divided and so polarized. The move in the index from, 2008 to now has been led by just a handful of stocks. What's the sense that you're getting now about the sectoral leadership? Which are the names that are going to take the markets further from here if that were to be the case?
See, I think what will happen is things like which are in the, the large private banks. Number two, the large private oil and gas companies. Number three, the exporters, which include, things like, the auto exporters, the pharma exporters, IT exporters. I think these will still continue to lead the market. You will get some, obviously, things like PSU banks, oil marketing companies and so on. So these, obviously, they will jerk up from the lowest that they have seen, but they will get from extremely cheap to maybe cheap. I don't see a great run out there, and anyway they are insignificant compared to the rest of the market. Similarly, things like infra and so on, things which have high debt. So some of these I think will go up, but they're insignificant as of now. But I do see that the large FMCG companies, there are a lot of headwinds, so I think some of that will start tapering down in terms of the stock prices, because they will have headwinds in terms of the fundamentals.
Nandan, as of now, there is very little participation. Yeah. No one in, no yes. Retail investors are not very active. HNI investors are completely out. But somewhere, do you think the euphoria has got exported? Because foreigners have been buying into Indian stocks and they've pumped in about $40 billion in the last 5 years.
Yeah, so there's a couple of things there. One is, when we think about all our problems, at the end of the day, whoever comes to power next, you see this government has sort of got itself cornered for a number of factors. And these factors are all important on their own. I'm not blaming them. Things like the judiciary, the media, and so on and so forth. So they're all, valid factors, but they've sort of got cornered. So any new government, whether it's the same party, whether it's a opposition party, whatever, it will have a little more room to start, taking the country forward. So I think we should wait a little bit for that to occur. Sorry, that's as far as the foreigners are concerned, they realize that, and the time horizon is longer, and they also realize that the rest of the world has very sort of deep structural problems, whereas we don't have that deep a structural problem. We have more of a cyclical problem in terms of a current account deficit, which is now getting fixed, and maybe in time, as growth goes up, then fiscal deficit will also get fixed. On the other hand, as far as the locals are concerned, until interest rates go down, you're not seeing so much of an increment between, interest rate, gold, and property, and the stock returns. So, which is why I think retail participation hasn't come down. But once inflation comes down and interest rates start coming down, I think that delta will get into place. Also, I hear there's a lot of, new incentives going to be given to the mutual fund industry in time. So, I think that will also help.
Nandan, what's the sense that you're getting? Do you think it is stories wherein there is some dollar-denominated earning, like in the case of Tata Motors, that are going to go do well, at least in the near term?
Actually, we just released a report where around about 15 people from the research team visited around about 36 towns all over the country, across 7 states, to get an idea of we met with intensive 1.5 hour interviews per person. We would have met around about 500 people. So this is not really a quantitative survey, but more a qualitative survey to get trends all across India. So we met dealers, we met distributors, we met SMEs, entrepreneurs, and so on. So I think there were 2 bright spots that we saw. One was non-farm rural income, and the other was exports. So obviously, and these are both things which is almost like it's just the trailer of the movie which has started. The interval is not yet there. So exports takes a lot of time for you to organize yourself. Just because you have a depreciation of the rupee doesn't mean immediately you can gear up for it. So across the board, I think exports, is a good story. more the smaller ones than the larger ones, because the smaller ones take even more time to go forward. And the second is the non-farm rural income, which, when it's night, you see stars. So obviously, when, parts of the economy are growing at 10% and so on, then you don't see the ones which are more secular growing at, 4 to 5%. But when everything is growing at 0 to 5%, this really shows up. So I think exports obviously is a continuing story in India.
Nandan, what's the sense that you're getting about the beaten down pockets? We've been seeing of late some trading moves coming in the metals pack. Do you think the market may see a shift towards the cyclicals and metals may, at least in the near term, work out?
I don't think so. I think, yes, cyclicals, as far as Indian cyclicals are concerned, as I said before, I think there is, as the economic growth improves, obviously the cyclicals will do well. But metals is, well, to an extent, obviously it is affected by the rupee depreciation. But far more important is the demand in China. So I think unless there's clarity on world growth, I don't think this thing. On the other hand, there are ores that India has, which I think once the mining ban is removed, I think that could be a good play there among the metal companies.
Nandan, so what's the way forward from now up until the Fed really decides to taper and we have an election outcome, whichever way it may go? What if we do have a favorable outcome in terms of election? It is not a hung parliament, and the Fed as well tapers come February or March. How do you think the market would absorb this news in that case?
You're talking about in case we don't have a hung parliament and we have a good government, obviously the markets are going to fly. Because, the problems that we have today are a lack of capex, which in turn, because in India, capex is actually a leading indicator of the economy, unlike, a developed economy where it's a lagging indicator. Because once capex goes up, then the hirings in companies sectors which actually spend a lot of money, like banking, telecom, services, government, etc., etc. So these start going up. Once that happens, then demand picks up. Demand picks up, then manufacturing picks up. So that whole cycle starts again. So I think the government has started off well. The Cabinet Committee on Investments has done some 92 clearances. So in a year's time, hopefully for each of these companies, a lot of them, 70% of course is power. So I think over a period of time, over the next 1 year, the capex will start as these companies get their full clearances, because these are just the initial clearances, which will then lead to demand going up.
Nandan,
so I think you're looking at a good story.
Right. I also want to talk about the telecom sector with you. We've seen some good moves coming in, at least in the last 2-3 trading sessions. The regulatory hurdles as well seem to be coming out. Do you think this sector will now emerge as a leader, perhaps, the likes of a Bharti, Idea, or for that matter, Tata Communications as well? Or do you think it will remain an underdog?
No, we actually are very bullish on the telecom sector. One is obviously because of competition and a lack of good sentiments. Obviously the telecom has not done well in the past. For the last 1 year or so, but slowly I think the regulatory system is easing. The government also needs another auction, so it will continue to ease the regulatory hurdles in the sector. Competition is also easing, even though there's a new scheme which has come out today from the Reliance Group. But I think over a period of time it will continue to be better. So that's one of the sectors that we are positive about. As a matter of fact, in rural India, female lingerie and SIM cards are still among the highest growth sectors.
Nandan, you mentioned a point that for a real bull market to start, ultimately earnings have to catch up. How soon do you think earnings will start reversing? Last 3 years we've seen a compression in earnings. When do you think earnings will start expanding?
See, this year what has happened, our credit growth, we forecast it to be roughly around about 13%, which is one of the lowest in the last few years. And that's sort of a leading indicator of the economy. So when you look at EPS growth is also roughly around about 13% for this year, 16% for next year. And then if a new government comes into place, so it'll easily be above 20% for the year after that. That's FY16 and so on. And there are lots of things which are expected in 16-17 in terms of energy, the new digs, etc. So across the board, I think the dedicated freight corridors, a lot of things which are expected all to happen in about 2016-17 onwards. So you can see a multi-year bull run. And as Prashant also said, once this polarization stops in the cyclicals and the old economy also starts putting its, weight behind the Sensex, you're going to see that happen. Earnings growth, I think the worst is behind us, mainly because the rupee has stopped, sort of misbehaving. So what happens is a lot of fear as far as the rupee is concerned. So once the current account deficit is under play and the fiscal deficit is not sort of, spent out, you can expect earnings growth to increase as interest rates fall. So we expect interest rates to start falling by next calendar year. So I think sometime next year, you would see earnings growth improving.